Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the Nasdaq Composite Index. In the last update, we were looking at this support that was collapsing at the top end of the weekly Ichimoku cloud. We were then looking for a 20% plus correction because the downside target was the bottom end of the cloud, and that's roughly a 20 to 22% correction. And then we got a nice tasty 26% correction, only to rebound from this 200-week moving average there at the bottom. Now we're back above the bottom in the cloud while fighting for support, or is fighting the resistance at the bottom end of the cloud, let me put it that way. And it will be interesting to see if we get a regain, if we regain that bottom in cloud chart zone. Is this previous support zone going to come back to support the market, or is this going to be a new resistance zone? Now, a critical thing to watch out for is this lagging line of the Ichimoku cloud. It seems to have stabilized in and around the same level as the cloud, but there is still some downside risk that it can dig into the top end of the cloud or even the bottom end of the cloud here. So we could still see more price action in and around this level here, these levels here. From an Ichimoku cloud chart perspective, because normally what happens in a quite strong correction, this lagging line will either rebound to the top end of the cloud or rebound from the bottom end of the cloud. So there's still some significant downside risk just looking at the position of the lagging line of the Ichimoku cloud and the two downside support levels. But so far, it's good that we're starting to see signs that the market wants to recover in and around this bottom in cloud chart support zone. Now, the problem is price action below the cloud here is bearish, so the weekly chart is now significantly bearish as long as price action is below the cloud. When we were here, we were highlighting these lows as the next downside target, and incidentally, we had a nice bottom in cloud chart support downside target here, and we also had the August low here, and then the April lows here as the downside support targets to be tested. So far so good. Did manage to rebound from these April lows, but we're not out the woods yet. We really need to be back above this bottom end cloud chart support level on the weekly. But let's just take a bigger stab at this and look at the monthly chart. On the monthly chart, there's two important levels we were watching when the market started to correct from this extended cloud charts extended level. What we mean by that is when the price action becomes too far extended from the cloud, we tend to get a correction. Every time the rally gets too far extended from the cloud, we get a correction. Another correction now. We've had one in 2021 where it started, and now this one in 24-25, first quarter of 25 started. And the front end of the cloud, that bottom in cloud chart support level, that was the first level to watch out for. This zone there, that was a critical downside target, as well as the standard line of the Ichimoku 15593. So these were the downside targets on the Ichimoku line there. So you can see so far so good. We did rebound from this cluster of support, the front end cloud chart support zone, as well as the standard line of the Ichimoku. So these are significant support zones. We could see a bit of a short-term relief rally back up now to these old resistance levels. The top end of the front end of the cloud here, you can see that zone, and then there's still some downside risk that we still might hit the top end of the cloud, similar to what we've had here in 2022. We can still hit this 14,000 zone on the monthly Ichimoku. So that's the downside risk. There is this top end cloud chart support zone that we still can hit. Let me just put that in there. Roughly 14,000 there. At that top end cloud chart support zone. So watch out for that zone. 14,000 roughly is the downside risk target if support fails at this front end cloud chart support zone, as well as the standard line of the Ichimoku. But so far, 3 down months. Could see a little relief rally here, but we could still see another 4th and a 5th down month to the bottom end of the top end of the front end of the Ichimoku cloud. So that's the downside risk factor on that chart. If we look at the daily picture, it almost looks like we've had a bit of a market capitulation to the downside here. Wide price movements, significant downside rallies. And this looks like we've just about completed a downward continuation pattern. One move down, a rebound, one move down, another, we could see a rebound. Now the rebound from these cluster of support zones can last up until we hit the bottom end of the front end of the cloud, as well as the standard line and the turning line. The turning line is the front one, green one there, and the purple one is the standard line. So these are the upside resistance targets, roughly about 16,800. That coincides well with that low there, and we'll be interested to see if this support zone that we were targeted on to the downside is going to come back in and act as support. So we're not out the woods yet, still some significant downside, but it looks like we've completed this second wave down now. First wave down, pullback, second wave down, pullback, and then we in for another third wave down that we could easily, the third wave down could easily hit these bottom in cloud chart support zones there. So a critical week ahead for the market to have a follow up a rally on the back of this strong move. It will most likely close that gap, but then it's going to run into trouble at that standard line and turning line of the cloud. These levels here, it's going to run into trouble at those zones. So keep an eye on for resistance to come back into the market at these critical cloud chart levels. So this rebound rally can last up to that point, but then we might be setting ourselves up for another big drop down in terms of a third wave. First wave down, pullback, second wave down, pullback, third wave down, pullback, and that can bring us pretty much closer down to 14,000. And as we indicated on the weekly, on the monthly, how far down this one can get, top end of the cloud here, that can be the downside target, as well as these levels here, 12,500. So that's the really big bear case story there. Now in terms of Fibonacci retracements, let's just take a look at that. In terms of Fibonacci retracement, we look at the 2021 correction there. We did see that it did actually get very close, a few points away from a 61.8 Fibonacci retracement from this when the rally started back here in Q1 of 2019. So that is quite significant that we actually did have a very strong, very deep retracement, did last for quite some time. So based on this chart, we're roughly about here now. So we still got a long journey to go. If there's any escalation in the tariff trade war, and if tax cuts come too late, and the Federal Reserve's rate cuts come too late, then we can still see the market trending below the cloud, which is bearish, for quite a couple of months, before we really start bottoming out and start a new rally. Now, if we look at this move, and let's pop a Fibonacci retracement on that move. So from this low when that rally started to that high, this is the estimated. Oh, that's not the Fibonacci one. Hold on, let me just delete that. Right, let's do this again. There we go. There we go. So you can see there we had a 23.6% Fibonacci retracement. That was roughly in line with the front end of the cloud. So that was a brief area where we did pop there, then sliced to the top end of the cloud, then went into a much deeper 38.2 Fibonacci retracement, and the 50% retracement was just below the cloud and in line with the Q1 April low there, the Q2 low there, as well as the just not far away from the bottom in the cloud, but also at the top end of that cloud chart level. So we've hit a 50% retracement, so there is still a risk that we can move back down to a 61.8% Fibonacci retracement. So what we might see here is now a little relief rally back up to that 38% retracement resistance zone, the bottom in the cloud there, and then a continuation of that move down in line with our second, our third wave third wave theory or third wave scenario going forward. So that's the analysis on the Fibonacci level. Possibility of a 61.8% much deeper correction back down to the 14,000 on the weekly Ichimoku. So the catalyst we're looking out for, back to the weekly, we need the index to start trading back above the bottom end of the cloud here. That will be good. The upside target then would be that bottom end of the cloud 16730, as well as the September lows. That's the upside resistance targets if we can get back above the bottom end of the cloud. If this cloud chart resistance holds, then we're going to retest this 15223 lows, as well as the 14,008 low and this 14.4, and then the other downside risk target would be this bottom end cloud chart support zone. So these are the downside risk targets. So interestingly enough, this might just be where the third wave can get us to. So first wave down, pull back, second wave down, pull back close enough to those cloud chart levels, and then another drop down to this 14,000 zone. So watch out for that. So that's the possibility of a third wave down if we get a brief rebound relief rally in and around the bottom end of the cloud there. Now if we take a look at the daily, you can see the very strong rebound there, nice long wicks at the bottom, bit too long at the top of the candle there, so lots of indecisiveness here. So the buyers and sellers are really struggling here. So we'll see if the bargain buyers are going to come back and push this market higher. So watch out for potential follow-up move today and this week to now go and close that gap, and then the upside resistance target would be 16,510, the bottom end of the front end of the cloud, and 16,888, the standard line of the Ichimoku. So these lines, the turning line, front end of the cloud, and then the standard line would be the upside resistance targets if we get that rebound rally. If we don't, then we're going to retest those previous lows as indicated on the previous chart. Now the scenario here is what we can possibly see here is if we look back at the previous corrections, this is the one we're currently in. We've got about a roughly 26% correction there from the highs to the lows. We're back below the cloud, that's bearish. And if we look at this correction of Q1 of 22, well, started in Q4 into Q1 of 2022, that was a 22% correction. Nice little rebound rally to the top end of the cloud, so that's a possibility that we could see a rebound rally back to the top end of the cloud. So there's that level there, as well as the front end. So these are the upside resistance targets, or in this case it would probably just be that one, 17,000, and then we could see another collapse through the bottom end of the chart, of the cloud chart support zone, and then we have this kind of third wave down, translating for the rest of the time while the Nasdaq is trading below the cloud. So trading below the cloud is bearish. For this rally to be really back in bullish territory, we need to be back above the top end of the cloud there. Now if we look at the scenario in Q1 and Q4 of 2015, where we had roughly an 18% correction there, also sliced through the bottom of the cloud, stabilized at all cloud chart support levels, and then rally back up from there. Now the scenario there was much different to what we've got now. Now we've got this tariff war going on, and if we don't get those tax cuts quick enough and rate cuts by the Fed, this rally might turn into a nice prolonged bear market rally below the cloud, with various kind of support and resistance trading opportunities in and around that. But yes, the fourth quarter 2018 one, also a 23% correction. Note that it eventually did manage to break through the top end of the cloud. So that's kind of what you want to see if you want to be back in bullish zone on the weekly Ichimoku cloud. So there's a lot of work for this market to do to be back above the cloud, but there's also significant downside risk that we could see the 14,000 here, as well as these lows and the bottom end of the cloud here. So we're not out the woods yet. But back to the daily, keep an eye on those key levels. The turning line and the standard line and the front end of the cloud, these are the next upside targets. Downside risk is obviously the support zones as we've highlighted them on the weekly Ichimoku cloud. Until next time, happy cloud chart trading. Bye for now.